Good afternoon, everyone. I'm Bob Evans, and I'm here today to introduce Jane Deeks, who will be telling us all about the VAT reverse charge for construction, or to use its full snappy title, the CIS VAT Domestic Reverse Charge Measure. We'll be covering what it is, when it comes into effect, what it's changing, and what needs to be done to prepare for it. By way of introduction, Jane has her own business called Deeks VAT Consultancy, and she's our go-to expert for all things VAT. I won't say how many years VAT experience she has, let's just say that she knows it all. So we're delighted that she's agreed to talk to us all today on this very important subject. Without wishing to steal any of Jane's thunder, I think it's worth stating, if you could just move that on to the next slide, Jane. Yeah, sorry, that one, yeah. Worth stating that, as the name suggests, this measure is closely associated and in fact only applies to CIS registered businesses. But as subcontractors operating under CIS, we believe that compliance is light touch compared to VAT compliance. So the likelihood is that the VAT section of HMRC will police this measure much more zealously than the tax teams do with CIS. We also believe that there are a number of subcontractors around the country who mistakenly think that their services fall outside of the scope of CIS. And as Jane will explain, it's more important than ever to get this right now with the new rules coming in. So without further ado, it's over to Jane.
Lovely, thank you, Bob. Hello, everybody. Bob's already introduced me, I'll just crack on. So first of all, what is the construction industry domestic reverse charge? It's not a new concept, but it might be something that you're only just hearing about in regards to the construction industry scheme. It's been around for quite a while now in regards to cross-border transactions and in regards to mobile phone transactions, but it's new now in how the HMRC have decided to use it. So the reverse charge, it will apply when it applies, the customer is the person that accounts for the output tax rather than the supplier. So the supplier would treat his supply as zero rated, and the customer would then effectively charge themselves output tax and also recover that output tax as input tax. So on the VAT return, the customer would put the output tax that he's pretending to effectively charge in himself in box 1. He would also recover that in box 4 as his input tax. And then again, it would be, the net value would be included in box 7 as a purchase. And the supplier would just account for the net value in box 6 of his VAT return. So effectively, between the two VAT returns, the actual VAT is getting declared. Now, when does it start and what's its purpose? So it was originally due to start back in October 19. I'm sure a lot of you was aware of that. And then it was rescheduled for another date, which I can't remember. But again, it was delayed due to Brexit and the coronavirus. So it's now due to start on the 1st of March. So we haven't got much time really to prepare for this. The reason for it is in order to reduce fraud in the construction sector. So HMRC feel that there's a need to bring in such type of anti-avoidance legislation and to prevent this fraud by bringing in this reverse charge. So the current position is if you're a subcontractor and you provide construction services to another subcontractor, you would normally just charge VAT in the normal way. Again, that subcontractor, if he's then making a supply to the main contractor, he would charge VAT in the normal way. But then if the main contractor is then making the charge to the end user, so that's the person that's employed the contractor to do the work, so that could be they could own the building and not be intending to make in any more construction services, so they might just use the building for their own purposes, or they might make a letting of that building. But that's the end user, and as normal, that would be the normal 20% output tax would be charged. However, so from the 1st of March, when this new reverse charge procedure effectively starts, the subcontractor making the relevant services to another subcontractor must treat it as a zero-rated supply. And so effectively, he would just account for the net value on his VAT return. The subcontractor, who is then making another supply to the main contractor, again would charge these services at zero rate. And then the main contractor would account for the reverse charge procedure, but he would also be charging the end user 20%. So it applies in certain situations. So it's always got to be, it's construction services supplied business to business, but there's a number of conditions that need to be met before it applies. So these are the conditions. So first of all, it's the supplies that consists of construction services and materials. The supply has to be a standard rated or zero rated supply. So if you was making some kind of exempt supply or zero rated supply, say of a new building, then obviously this wouldn't apply because there's no VAT for HMRC to worry about the fraud situation of. The two parties involved must both be VAT registered customers, and the supplier and the customer will both be registered for the CIS scheme. So where the customer intends to make an ongoing supplies of construction services to another party, and then the supplier and the customer are not connected. So providing all those conditions are met, then you would be falling in with the Construction Industry Reverse Charge scheme. There's certain things that it doesn't apply to. So as I previously have said, if you're making supplies in relation to a VAT exempt building, then that doesn't apply. If the services that you're providing don't fall within the construction industry scheme, again, that wouldn't apply. But as Bob said, that's something I think that people need to be wary of and careful now, and should be checking. If they're not already in the scheme, then maybe they should be seeking advice and checking to see whether they actually should be in that scheme or not. So the reverse charge also doesn't apply to staff or workers. So where employment business, for instance, supplies staff to do construction work, then the person employing those staff will be the person that's responsible for the actual construction services. And in that instance, it's a supplier's staff, and this reverse charge procedure doesn't apply. Where it's a supply of labour, then the reverse charge would apply where the supply of the labour is also responsible for those construction services. Okay, so it doesn't apply if the customer is not VAT registered, and the reverse charge doesn't apply where, as I said previously, where it's the end user. So that means the end user is the customer who's instructed the contractor and doesn't intend to make any further ongoing supplies of construction. However, in order for it to apply, they must issue a certificate. It wouldn't apply either to intermediary suppliers, and intermediary suppliers are suppliers that are connected. So if you have a landlord and a tenant, and the construction services are being provided to the landlord, who's then recharging the tenant, as they're connected, it wouldn't apply. And this is because you wouldn't expect the connected parties to be doing any fraudulent behaviour between themselves. And whether you're connected or not is you're deemed as connected if both parties have an interest in the particular property and which the construction services are being procured for, and you're also where you're in a corporate group together, you're also classed as connected. Then there's this whole list here of excluded services, which I don't intend to go through all of them because you'll be getting copies of the slides and I believe a recording, so you can look at these at your leisure. But I do believe that we have an architect in the audience, so I thought I'd just point out that the professional work of architects is excluded from the services. But that doesn't mean that you can now log off and go back to your normal day-to-day business. I hope you're still going to carry on and listen to the rest of the seminar. So what is the impact of the reverse charge procedure? So it does require, there's going to be quite a big change for businesses. And firstly, you know, staff need to be trained to identify relevant CIS contracts and determine whether they're supplying the services to an end user or potentially an intermediary. Accounting and bookkeeping systems will need to be modified to cope with the new invoicing and reporting obligations. Cash flow is going to be a major issue for the subcontractors because they're not going to be charging the VAT and they're likely to become repayment traders. So in that case, they're probably better off moving from quarterly VAT returns to monthly VAT returns so that they can recover their impact tax sooner. However, the main contractor, as he's not going to have to pay any output tax on his supplies, then he's going to be in a cash flow advantage. Sorry, I'm getting distracted by dogs at the moment. The dogs are coming to visit me. Apologies for that. Where was I? So it may require the business who's the recipient of reverse charge procedures, if they're not VAT registered, although we said earlier that in order to be fall under this regime, you have to be VAT registered, but there are it is possible that by being subject to the reverse charge that actually throws you over the VAT threshold, because as you have to pretend that you're making a supply and you account for output tax when you're declaring your VAT under this scheme, that actually is treated as though you're making a supply and that supply goes towards your VAT registration threshold. So it could be that you're a subcontractor that's not VAT registered, but due to this scheme, you do have to VAT register. So you need to, when you're monitoring your turnover for VAT registrations purposes, in this instance, you also need to be looking at the reverse charge as well. There's a few problem areas, which are where you're supplying mixed supplies, so you're providing construction services as well as goods, then the reverse charge applies to the entire contract. So whereas a single contract supply both. Now, I believe this is different from the CIS scheme, as I understand that only applies to services and not goods. We wouldn't recommend you splitting the contract, as that could be seen as fraudulent by HMRC. And the whole point of this legislation is to stop fraud. So it wouldn't be a good idea to split the contract. So where there's mixed supplies of specified supplies and non-specified supplies, again, the reverse charge applies. Now, your specified supply is a supply that's subject, because it meets the relevant conditions, and therefore it's a supply that's subject to the reverse charge. And a non-specified supply is relating to supplies made to the end user. So you mix supplies. So where you've got a mixed supply that is a mixture of specified supplies and accepted supplies, then this doesn't fall within the reverse charge procedure. So this is effectively where the supplies and construction services that would normally be within the CIS scheme, and that they're made to an end user, or an intermediary, I should say, not an end user. So it's where the parties are connected. Then in that case, the reverse charge doesn't apply. When it comes to tax points, in regards to just where normal VAT invoices issue, it's pretty simple. We're just looking at the general tax point rules. So if the invoice is issued before the 1st of March, the normal rules apply and you should charge VAT on your supplies. On or after the 1st of March, then we're back to the domestic reverse charge, it must be applied. Where authenticated tax receipts or self-bill invoices are issued, things get a little bit more complicated and the tax points change slightly. Rather than looking at the date the invoice is issued, they're looking at the date of when is the customer entered on the accounting system and what's the date of the payment. So if the customer's entered on the accounting system prior to the 1st of March, but they don't make a payment until on or before the 31st of May, again, the normal VAT rules apply and the supplier should charge VAT. If the customer's entered on the accounting system before the 1st of March, but payment isn't until on or after the 1st of June, then it's the domestic reverse charge that applies. Where the customer's entered onto the accounting system on or after the 1st of March and payments made on and after the 1st of March, then again, it's the domestic reverse charge. So depending on how you invoice your customers, then the tax points will differ accordingly. Moving on to VAT schemes. So when the reverse charge applies, that particular supply can't be used under the cash accounting scheme. The reverse charge can't be accounted for either under the flat rate scheme. So you need to consider, is it worth being on these schemes anymore? And in regards to the flat rate scheme, as you can't recover any input tax, it's probably not a good idea to remain on that scheme where your services fall under this reverse charge. If your business is likely to become a VAT repayment business, which it probably is, where you're providing services and goods, then it's going to be more beneficial to move to monthly VAT accounting rather than quarterly VAT returns. I've provided you with a copy of a sample invoice just to let you see, you know, how it's possible to set it out. It doesn't have to be set out exactly like this, but we recommend this type of information. So as the supplier, even though you're not charging VAT, it's still your responsibility to get the VAT amount correct. So we would always recommend that you add the VAT amount into the invoice, but then you show that the amount due is only the net amount. And then that way the customer knows that they need to charge £8,000 in this instance VAT. We recommend that you put some kind of statement on the invoice, and this one is quite simple. If we put that one there, then the customer then knows that they have to account for the reverse charge. So the bulk of the risks in regard to this with the contractors is the customer. So if the customer is charged VAT and they pay that VAT, when they come to reclaim that VAT, if HMRC looked into it, they might say, well, actually, the reverse charge should have applied here, and therefore this is incorrectly charged VAT, and we're not allowing you to recover it. You're then in a position then where you've got to go back to the supplier and ask them to refund the VAT, which could potentially be difficult. If you do make the payment of VAT when the reverse charge applies, it's potential that HMRC could suggest that there's fraud involved. So they want to know, well, why have you paid VAT when it should have been subject to the reverse charge? And also, why did you fail to issue an end user certificate? As we mentioned earlier, where you're the end user, it's only really the end user or an intermediary that's going to be charged VAT, and it's their responsibility to issue a certificate to say such. So HMRC won't be looking very favourably on people that are paying VAT when they shouldn't. And as Martin or Bob, sorry, I'm not sure which one, mentioned, that the VAT man is a lot stricter than the tax man. So if he thinks there's fraud involved, he's going to do everything he can to shut your business down. He's not going to be bothered about the economy, how many people you've got employed. If he thinks there's VAT involved, then they just want you out of the system, and they do have a lot of power, and they are, like we say, much stricter. So moving on to the burden. The burden is on the supplier, so they have to decide whether the construction services they're supplying fall within the reverse charge, and they have to determine the status of their customer. Is their customer another subcontractor, or is their customer an end user or an intermediary? what we found by discussing this with with main contractors within the industry is that they've said they're going to work with fewer subcontractors. So they're going to try and stay with the contractors that they've already built relationships with, or intend to build relationships going forward, because that means then they're spending less time on explaining where their position is in the supply chain, validating their VAT registration number and issuing certificates. So that's quite a concern for the industry. Again, for the supplier, there's a significant cash flow disadvantage. So I know most subcontractors rely on that VAT amount for 3 months so they can use that in their business. But now they're going to be in a situation where obviously they're not getting that VAT. And I know that talking to a lot of people, they're worried that that could possibly put them out of business. So moving on to recommendations. So we recommend that both parties start talking early on. In fact, if the customer was to include the reverse charge information in the job tender, then that way they could be treated as supplying the certificate to the contractor. HMRC have said these certificates need to be issued, but they've not said how or given any example of how they should be formed or structured. So it would be possible to include that in the job tender, and then you're not under any, everybody knows where they stand, and you're not in a position where you might forget to actually issue that certificate. With the suppliers, again, they should include in their job tenders whether they believe they fall within the reverse charge or not. We also consider that warranties to cover any VAT and penalties would be a good idea. So if the subcontractor charges you VAT incorrectly and there's a warranty to cover you in the contract, then then this responsibility shifts back to them. So it's more of it would be more of an encouragement to make sure that they do get it right. Because of the cash flow disadvantage, then as previously stated, again, monthly VAT returns would be the way to reduce any cash flow burden. And if that's the way that you intend to go, we suggest you do that as soon as possible, because the variation team is probably going to be very busy doing this for a lot of customers. If you're using cash accounting, then we suggest you move to accruals basis, because as you've not got any output tax responsibility, then it's pointless really being on the cash accounting scheme. And as soon as you get a VAT invoice, you can recover any input tax, so you wouldn't want to be on it. And then we'd also recommend that you review your bookkeeping and your invoicing systems and ensure that the invoices are all have got the correct information on them. So that's about it from me. The only other thing I would say is that HMRC have said that they will give a light touch to this new procedure for the first 6 months. But HMRC's light touch is that they wouldn't apply penalties. So if that was due but you didn't charge VAT, then they would assess you for it. If you've been charged VAT and you shouldn't have, they won't repay it. So the light touch isn't as light as you would expect or hope. So that's about it from me. So I will now hand you over to Bob, who's going to talk about the charity that Robson and Laidler support. Thank you.
Thanks, Jane. So we would encourage you to get in touch with either us or Jane as soon as possible if you need to review your bookkeeping systems or you need to review your CIS status. Now, before we move on to the Q&A part of today's session, I just wanted to pause and thank you for attending. At RL, we're committed to supporting the UN's global goals, and so in partnership with B1G1, for every delegate who's attended today's session, we'll be donating 6 days of an online education program to children in India. I can tell you that there have been 45 people on today's webinar, so that translates to 270 days of education, or to look at it another way, about a year's worth of education for one child. So thank you very much for attending today and making a difference. So if we can just move on to the Q&A, let's see that, yeah, we don't actually have any questions in the chat box just now. So if anybody has anything they'd like to raise, could you can you unmute yourself, Martin, or not? Can people unmute themselves?
People can unmute, but if we can have not everyone jumping in all at once. Obviously, if there's no questions, it means that it worked perfectly.
Yeah.
Here we go.
Okay,
We've got the first question. Oh, sorry, Bob. Go on.
So yeah, Michael's asking, what counts as a group? Is it 50% or more, or a lower limit?
So it's in relation to the group companies for corporation tax purposes. So I guess you guys would be better off answering that than me, because I suppose you know more about that type of thing than I would.
Yeah, do you have any thoughts on that, Martin? In terms of...
Sorry, I was monitoring the questions. I didn't really catch that.
Yeah.
So if that's
so
the case,
Michael,
it's going to be 50% or more, I would have thought, yeah?
Yeah. Yeah, to form a group of companies, yeah. And so Michael's also asking whether there's an example of an end user certificate. Do you have anything like that, Jane, or...
No, I don't. And like I say, HMRC hasn't given any examples. So I believe that it might be just worth speaking to your solicitor when you're drafting your tender documents, and it might be just a matter of having some kind of either drafting some certificate yourself or just a paragraph to state that you are an end user in the instance.
So are we looking to give examples of communication? Because you mentioned in your talk there, Jane, about encouraging communication between suppliers and customers. Are we going to suggest any examples of that how that could be put?
So again, that's the same thing, isn't it, really? Just having something in your tender documents. So that would be something I haven't got any examples of. There's no examples out there, but I know other people are talking and speaking to the solicitors in regards to the tender document to get this in as a legal perspective, so it's drafted correctly.
I think it's the sort of thing that's going to evolve over time as well. So.
Yes.
And can we clarify what you mean by intermediary in this sense?
Yeah. So the intermediary is the person that's connected to the end user. So, for instance, if you've got two companies, for instance, so maybe you've got a property letting company and a construction company. So if that construction company is providing construction services to the property letting business, then the reverse charge wouldn't apply because the two parties are connected. So if that construction company employed a subcontractor to provide services, then they would, if it meets the relevant conditions, they would account for that under the reverse charge. But then the intermediary would then be supplying construction services onto his connected party, and that wouldn't apply. The other example of connected party is landlord and tenant. So, for instance, if the landlord employs a subcontractor to provide services to him that he's going to then recharge to the tenant, then that subcontractor wouldn't account for that under the reverse charge. Wouldn't account for that under the reverse charge. So they would charge that to the landlord, even though the landlord's technically making another supply, but because those two parties are connected, then they're regarded as the end user. I think I actually gave the wrong example earlier. So yeah, so if we've got to go back to got a construction company and we've got a property letting business. So if a subcontractor provides services to the construction company, then they wouldn't use the reverse charge because the construction company isn't seen as making another supply onto the end user, because the intermediary is sort of classed as an end user. Because the two parties are connected, we've not got, HMRC's view is there's unlikely to be any fraud because then not one of the parties isn't going to run away.
Sure. Okay, thank you. So Paddy's asking, he's assuming that Iris will make updates to their accounting package to deal with this. And I think it's fair to say that we would expect Xero, Iris, etc., to make amendments to their software, but this is really something that needs to be reviewed just to ensure that they are fully up to date with the new rules that are coming in.
Yeah, I agree. And I know just this morning when I was looking at things, I noticed there was articles. There was a really big article about this reverse charge on Sage's website. So if they're writing about it, for instance, then you would expect that they would have set their systems up accordingly.
That's right. Yeah, just as you would with any other major taxation change.
Exactly, yes. And I know a lot of the software providers do allow you to account for the reverse charge in regard to cross-border transactions. So it might not be such a big deal for them to include an extra code or however they decide to do it.
Susan's actually mentioning that Xero have already made that change. Yeah, they've introduced new tax codes ready for the reverse charge. Michael's asking whether charities are exempt. I think the assumption is that they would be.
I'm not sure in what instant, because charity as in the end user, or would it be, would you have a charity that's a provides construction services?
I guess it's a possibility, but
yeah, I'm not sure. I suppose the situation is if there's nothing in the VAT legislation that I'm aware of that exempts charities. So I suppose your default is to go back. Is the charity VAT registered? If it's VAT registered, does its services fall within the CIS scheme, and should they be registered under the CIS scheme? And if they should, then depending on who they're making their supply to, if it's another contractor, then yes, it would apply. That would be my view. Yeah.
And if you're in a group VAT registration, how would that affect this?
Well, that's a great question. But when you're in a VAT group, there wouldn't. I would imagine that there's no need to perform the reverse charge, because any services supplied within a VAT group are disregarded for VAT purposes anyway. So it wouldn't be required.
And if we're a construction business supplying construction services to overseas companies, how is that situation affected by these new rules? Do we just ignore it?
I don't believe. I would like to check that one before I give a final answer, and we maybe get that back to you when we send the slides. But I believe that it wouldn't apply, but I will check. But it depends as well, where are those construction services being supplied? So are we saying, the construction services supplied to a foreign customer, but to do with land in the UK? And I'll need to check that, because if we're looking at if construction services provided to a foreign customer with land based in another member state, well, within the EU, then you're looking then at a potential VAT registration in that country anyway. So, and it would fall outside your UK VAT. VAT registration anyway.
Okay. So can we clarify the difference between staff and workers or labour? And are there any other bodies that would be exempt in that regard?
So as far as I understand, if it's an employment type bureau and they're providing staff, then the person employing that staff are responsible for the actual construction services, and therefore that is a supply of staff. But where a subcontractor is supplying labour services and they remain responsible for the actual construction services, then in that instance that is classed as falling within the construction industry scheme, because of who's responsible for the construction. Is it that subcontractor or is it another contractor?
So if for instance, if you've got an agency providing labour only joiners, they're just providing the joiners, but the management of those joiners is under somebody else's remit. Is that what you're saying?
Yes. So
Yeah.
in that instant, that would be classed as a supply of staff and outside the scheme.
Okay.
Whereas if somebody employed the joiner to come in and it was the joiner's responsibility to make sure that the work he conducted was all conducted correctly, then again, that's treated as labour only.
Okay. So Martin's making a point here. Under CIS, if you spend a large amount, say 1 million, you fall under CIS. So charity could fall under CIS in that respect.
Yeah, I'll jump in there, Bob, if that's all right. So yeah, basically, a contractor, as defined within CIS, is someone that pays subcontractors to do construction work, or if you're a business, which could include charity, that does not do construction work, but usually spend more than £1 million a year on construction. So if you're a very large charity, building a lot of your own premises, for instance, you might spend £1 million on construction, even though you're not within the industry. And that would then bring you in as a contractor, and this would then apply. I thought that was just worth putting in. Yeah.
Martin, there is actually an exemption for charity, so they don't
is
come
there?
within
Right.
it, if you look. So yeah,
all
sorry
right.
about that.
Yep. No, that's okay then. Yeah.
There's a good one here from Denise. We deal with various customers, from construction companies to personal homes, for the supply and fit of plastic. How do we differentiate who is to be charged VAT?
So if you're in order to fall under the reverse charge procedure, you need to be making the supply to a VAT registered business customer. So if you're providing services direct to the general public, then they wouldn't fall within the scheme, and you would have to charge output tax. Okay,
thank you. And we've got one from Will. Would a recruitment agency supplying labour have to assess its customers, and then in turn, if we pay a subcontractor via payroll company, would this also need to be looked into in more detail?
I suppose if you're supplying and it's being paid for via the payroll, then it would fall in as a supply of staff rather than labour, and therefore wouldn't apply.
Okay. Are there any exemptions available from VAT reverse charge, like there are in CIS, where large companies can be given an exemption certificate so their customers do not have to make any deductions? So that's like a gross payments.
No, it's if you meet the conditions. I suppose the more, I suppose the higher the value, the more risk of fraud. So therefore, HMRC are not going to allow exceptions like that in that respect.
Okay. And if companies fail to correctly account for this, could there be any personal liabilities for the directors? Is the assumption that HMRC will consider it fraud, even if it's just an error?
Yeah, I mean, there is always, if fraud is involved, then there's always that chance that HMRC can assess things on a personal basis. So
there's also, as you mentioned, is a light touch the first 6 months, so yeah, allowing people to get their house in order.
Exactly, yeah, and that light touch, they're still going to make you pay the VAT or not reclaim the VAT if it's been charged correctly. But the light touch is only in relation to penalties, and that's for the first 6 months.
Okay, yeah.
Can I just jump in there, because I think, sorry, it's Martin here. I don't know if I'm coming up on video, but one of the issues I think we have here is a lot of people have been operating outside of CIS who probably should be in CIS. So the revenue would probably make the case that if you're in CIS, they will definitely have told you about this, because they will be writing to everybody in CIS. So the risk here is that you could only really say we didn't know about this or we made an error if you haven't read what they've sent you, or you thought you were outside of CIS and should be in it. So what we're recommending is, if you're doing any kind of construction work at all, it's worth just double checking your CIS status in the first instance. But if you're in it, then, you know, a basic error, HMRC wouldn't normally seek to go to the directors unless the company could pay. If it was sufficiently high value or such an obvious error, then HMRC and any other body reserve the right to go to the directors anyway, because that is one of your responsibilities as a director, is to get these things right. And that sounds pretty harsh the way I said it, but just saying that for brevity.
Exactly. And like we said again, the VAT man is much more stricter, and they don't take ignorance of the law as an excuse for anything. So it's, you know, like you say, if you're in business and this is your area, you should know about it.
So I've got a follow up from Michael. This is on Will's point earlier about agencies. If employment agencies supply labour which they've sourced from another agency, might they need to look at their position more carefully?
Yes, because if they're sourcing the labour, then are they making a supply of construction service rather than a supply of staff? That's probably, again, that's something they need to look at. Whether if they're doing that, are they going to fall under the CIS scheme?
It possibly still, yeah, it's where the supervision lies, isn't it, and the direction of that labour. Yeah. Yeah. So I think, unless there's any more, I think that's all of the questions that we've got in the Q&A box. So just a couple more seconds to allow somebody to get in there.
When the questions first didn't come rolling in, I thought I'd bored you all and said, I thought, no, it's not that I've done a good job of explaining it. It's more like I've sent everybody to sleep.
I think you just shell-shocked them all. Right, so finally, Gemma will be sending out copies of all the slides and a link to the recording of this webinar, and also our guide on this subject, along with a brief feedback survey. And we'd be very grateful if you could complete that and get it back to us.
Bob, can I just jump in?
One more question there, Bob. Got one more
Can
question.
I just jump in and ask Jane?
Yeah.
Basically, the people that we deal with fitting plastic handrail capping all over the country. Do we just need, because it can be through a tender, can be through emails, it can be through verbal quotations. Do I just need to find out if they are CIS registered and get their information in an email of their CIS registration number? And then basically, if we are a subcontractor working for a subcontractor, then that wouldn't apply. So if they're not, then it would.
Yes, exactly. Yeah. So you need to ask them the question, are you CIS registered? We believe our services fall under the reverse charge, and then get that something in writing for them to tell you their status, for you to know then whether do you charge VAT or don't you.
So emails and printing them off is illegal.
Well, yeah, I mean,
to say we've done this correctly or can't be penalised.
Yeah, I mean, HMRC haven't specified how a certificate should be issued. They haven't given any guidance on the structure of it, but providing you've got something in writing, then I don't see that being a problem, because literally they're just confirming to you, they're confirming to you whether they're an end user or whether they're another subcontractor. So if they confirm that actually we're another subcontractor, you've got to use the reverse charge. If they say we're an end user, then effectively you treat that as the certificate.
Right, that's great, thank you.
I'll just jump in there if I can. There's an interesting point there, because if you, let's say you do £1,000 worth of labour and it's within CIS but you weren't aware, you could raise that bill for £1,000 plus VAT, expecting to receive £1,200 from the customer. If they're on the ball and they realise that you should have always been CIS, you're probably sitting waiting for £1,200. £200 of that you could sit on for up to 3 months until you pay it over at the end of the quarter. You also were expecting £1,000 for your labour to come in gross. You could actually be in a position where you're waiting for £1,200 and now only get £700 or £800, which will make a massive difference to your cash flow. So it really is worth making sure that you know that the work you do is within CIS.
Yeah,
Definitely. Yeah.
And just one more question there.
Yeah, it's the definition, or the difference between gross and net status in CIS terms. My view is that would be irrelevant in these circumstances. It doesn't matter if you've got gross payment status for CIS, you would still fall under the RC.
Yeah, exactly.
Yeah. Okay. Thank you. So as I was saying, we're going to be sending all of this out to you. So all that remains is to thank you once again for attending. We really hope that you found it useful. As always, time is of the essence as this change comes into effect at the start of March. So please feel free to contact either myself or Jane for help in adapting using the details on screen.
Great.
Thank you very much.
Thanks a lot.